And cash management is actually something very, very fundamental to all of us. It's basically the method that you use to squeeze and optimize some of your spare cash and savings that's lying around. Fundamentally, everyone should have anywhere between 6 to 12 months of savings. And that number is something that will grow as you progress in life. When it comes to managing your spare cash, you should definitely also not take any risk with it. It should be very, 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 very low risk. Everyone loves FDs in Malaysia. In Malaysia, there is about 700 billion worth of FDs sitting there, being locked up. And also there's some high-yield savings account. High-yield savings account are not that popular in Malaysia. Basically, it's like a savings account with slightly higher interest. And what would you use this for? Besides emergency funds, maybe you have investment funds or savings that you have also earmarked for a very specific reason. So let's coming back to what cash management is, right? Cash management is basically you trying to optimize your spare cash and you don't want to take any risk. So we'll be focusing on the one in the bubble here that says ultra low risk. So we all know that FDs are basically very close to no risk because the only risk standing between you and your money is the bank going down up to 250,000 ringgit in Malaysia. You move a little bit up the risk-reward curve and then you'll get what we'll be focusing on today, which is money market fund. But money market fund is basically, as the name suggests, a fund where you pull investments of different investors and then you invest in something very, very low risk. So these things are basically FDs and also very, very short-term notes between banks to give you an interest rate. So this money market fund also is very liquid. You can go in and out anytime. And basically you can get a slightly higher return than FDs. If you imagine, interest rates have been going down steadily over the last few years. The OPR is 1.75 now, and the Bank Negara is meeting again in September to potentially cut rates. So FDs will also be quite low return. When you see now the FDs range from 1.8 to 1.85%, but with money market funds, you get a slightly higher return because, as I mentioned, it is a fund that invests in predominantly FDs. They will have invested in some FDs before that have a higher rate, okay? And because there's a higher rate, even if you go into an FD as into a money market fund now, you will still enjoy the returns from the FDs that were invested before your time, before you actually entered the fund. So that's why when in a lower interest rate environment, money market funds get higher returns than FDs. So focus is on how to manage your spare cash using what we are calling StashAway Simple. The terms and conditions are basically very, very minimal. With StashAway Simple, you just deposit however much you want and you can start earning the projected rate already. You can take it in and out anytime and get the return. So you can basically put in your money and not lock it up. And you can also use it to transfer into the different StashAway portfolios. And this one also happens to be Sharia compliant. So when you talk about the underlying asset class, StashAway Simple is a money market fund. Even though not talked about that often, it's basically a very mainstream, widely used instrument. And money market fund is not anything exotic. In fact, it is most plain vanilla asset class out there. Typically, banks will market the FDs to retail clients because it's a way for them to lock up the money. Whereas money market funds is actually used to actually market to corporates because these corporates have a lot of cash on their balance sheet. So money markets are one of the biggest asset class categories in Malaysia. You can see in the highlighted area here in March this year, that's 1/5 or 20% of the total assets under management in Malaysia. So let's talk about that return. Why is it a projected rate of 2.4? This is a forward-looking rate. Okay, what is the estimate of this going forward for 12 months? The money market fund, at the end of the day, is made up of many, many FDs expiring at many periods. And because of that, basically, it's the reinvestment rate of the money market fund itself. So basically, the rate will change if interest rates change. So it won't change overnight like FDs. And also, it is net of fees. For the fees, StashAway doesn't charge anything on this, but we use an existing fund manager. They will charge a rate of 0.165%, and that is basically the lowest fee in the market. 2.4% also includes the rebate from the fund manager, okay? So that's why you will not only get a slightly lower management fee, but you also get a slightly higher return because we give you the rebates.